Hey everyone, Avette here. A quick CCI special announcement here. We don't usually drop mid-week updates, but with the way the market's moving today, it felt like the right moment to check in with you. And yes, the market is red today. The Dow and the S&P 500 both slipped again, while the Nasdaq managed to stay slightly green. Days like this can feel uncomfortable, especially if you're newer to investing. But before you rush to hit the sell button, take a breath. Red days aren't a signal to panic, they're a signal to pay attention. When the screen is red, most people react emotionally. But the investors who grow over time are the ones who learn to read what the market is actually telling them. Look at the S&P 500 today. It's pulling back from recent highs, but still sitting far above last year's lows. A pullback doesn't erase the trend. It just gives you a clearer view of where buyers and sellers are stepping in. Instead of running, zoom out, ask, is this fear-driven? Is this macro noise? Or is this a real shift in fundamentals? Most of the time, it's noise. Think back to Liberation Day last year, when tariffs hit like a shockwave. The S&P 500 fell more than 10% in just 3 days, one of the worst drops since World War II. Headlines were screaming recession. People were convinced the market was done. But what happened next? Markets adapted, businesses adjusted, and 6 months later, a global 60/40 portfolio was up over 20% despite the chaos. That's the lesson. Macro shocks hit fast, but they don't last forever. The market prices them in, moves on, and finds its footing. So when you see red today, remember, we've lived through far worse, and the recovery that followed was even stronger. When markets pull back, this is when disciplined investors buckle in. Red days create mispricing. They reveal which companies are actually strong and which ones were just riding momentum. If you're a long-term investor, this is the time to build your watch list, track your favorite names, look for discounts, add slowly and strategically. And if you're a trader, volatility is your playground. The S&P is coming into levels traders have been watching closely. That means setups are forming, but only if you're patient enough to wait for confirmation. No chasing, no guessing, smart trades only. So yes, the market's red, but red isn't danger. Red is information. Red is opportunity. And if you learn to read it instead of fear it, you'll start seeing the market the way professionals do. Stay focused, stay disciplined, and stay ready, because these are the days that shape great investors. And on that note, I'm calling it a day. I'm heading home to unwind, reset, and recharge. Do the same if you can. The market will still be here tomorrow. I'll see you Sunday.